Welcome in this video. Where will ZBCN coin price go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful look at the chart clearly shows that an important horizontal level, which has worked as a very strong resistance zone in the past, has been broken to the upside with the recent price action. This level was previously a critical area that price struggled to break above many times before, with traders preferring to take a sell position. Now, however, the price has managed to break above this strong resistance and made an upside breakout. Breaking such resistance levels are considered to be very positive signals in technical analysis. This is because it shows that sellers are losing their power in the market and buyers are becoming dominant. More importantly, after breaking above this important resistance, the price seems to have returned back to this level, tested it, and successfully passed this test. In other words, this level, which previously worked as a strong resistance, has now become a new support, as per the classic rule in technical analysis called the support-resistance transformation. This transformation is a very important sign for the healthy progression of uptrends. Because when the price breaks a resistance and then returns and uses it as support, it both confirms the validity of the breakout and indicates that the uptrend can continue as long as it doesn't break below this level. This technical development could have a positive impact on the psychology of many traders in the market. This is because if the price has repeatedly failed to break a level, it is considered a strong resistance, and investors are cautious about prices approaching this zone. But now that this resistance has been breached, the perspective on this area completely changes. Investors no longer see prices approaching this level as a selling opportunity, but rather as a buying opportunity. This psychological transformation facilitates the entry of new buyers in the market and contributes to the acceleration of the uptrend. Moreover, in terms of technical analysis, the new support area formed at this level can positively affect not only short-term price movements, but also medium and long-term expectations. This is because when the price breaks a point that it previously failed to cross and then returns and defends it, it shows that the market is determined to move upwards. Such structures are often considered the start of an uptrend. However, a look at the volume data also shows that if there is a significant increase in trading volume at the time of the breakout, this provides strong confirmation that the breakout is a real breakout and not a fake one. Traders generally trust volume-backed breakouts more. Therefore, the fact that the price has both broken through a strong resistance and supported it with volume is technically a strong bullish signal. Currently, the price has reapproached this level and is trying to hold on to it. This can be read as an extremely positive technical structure. Because such movements indicate that investors have now adopted this area as a strong support and are expecting a rise from here. If the price continues to stay above this support, an upward movement becomes quite possible again. Especially if the reaction from this level is strong. This could create a new momentum in the market and start the price's journey towards higher resistance zones. When this level becomes a strong support, it not only means a short-term reaction move, but also signals that the price has become clear in its search for direction, that the market is now embracing an uptrend. The likelihood of this bullish move becoming permanent also increases, especially if such structures are forming on larger time frames. Looking at past price action, it may have been observed that bounces from points similar to this level have been quite strong. This may lead traders to think, strong moves have come from these levels in the past, so why not again? Such historical similarities can be a supportive element in investor psychology for the price to rise again in a similar way. But we cannot decide the analysis only with support resistance. Let's look at other metrics. Keep watching. When we take a broader perspective of the chart, one of the most striking technical structures is a clearly defined and steadily progressing upward trend line. This trend line stands out as a dynamic support level of great technical significance, frequently touched by the price over time and closely monitored by market participants. Such upward trend lines not only help us understand past price movements, but also offer a crucial roadmap for anticipating potential future price reactions. This particular ascending trend line has acted almost like a floor during every pullback, allowing the market to regain strength from this level. Each time the price has touched this trend line, it has reacted with a bounce, confirming that this region is a highly reliable and strong support zone for investors. The most important outcome of this is the strong confidence that investor psychology places in this level. In technical analysis, the more frequently a trend line is tested, the more reliable it is considered to be. The repeated approach of the price to this line followed by upward reactions has enhanced both the technical validity of this trend and its influence on traders. According to the current chart structure, the price is once again approaching this upward trend line. This movement represents a critical observation area for many investors. As in the past, the price has a high potential to produce another strong upward reaction upon touching this level again. In such scenarios, the technical pattern known as the price bouncing off a trend line becomes relevant, which is regarded as a highly positive signal for the continuation of an uptrend. Another significant aspect of this trend line in terms of technical analysis is that it demonstrates how healthily the upward trend is progressing. For a price movement to be considered a healthy uptrend, it is expected to make periodic corrections and then resume its upward movement from key support levels during those corrections. In such rising markets, the price typically moves along an upward trend line. Therefore, the current ascending trend line clearly indicates that the price is continuing its upward movement in a natural and sustainable way. As this upward trend continues, if the price touches this trend line again, technical buying opportunities are likely to emerge. Many investors view this level as a buy zone and may increase their positions accordingly. This can exert upward pressure on the price, potentially triggering another sharp rise. Especially for short-term traders, such trendline touches often signal high probability zones for profitable trades. At this point, it is also essential to evaluate volume data. If an increase in trading volume is observed when the price touches the trend line, it indicates that buyers are stepping in and that the market is once again ready to defend this level. Technically, supported structures that are backed by rising volume provide investors with confidence and suggest that the upward movement is built on stronger foundations. In addition, it is important not to overlook the psychological impact that such trend lanes have on investors. Traders tend to focus on clear and consistent structures on the charts. These prominent upward trend lines create a shared awareness among investors. In other words, the price reaction to this trend line is stronger because it is widely seen, acknowledged, and followed. This increases the likelihood that the trend line will hold and that the price will bounce upwards from this level once again. When we take a detailed look at the chart analysis, the current structure of the vortex indicator, which has an important place among technical indicators, presents a remarkable picture. This indicator, which is often used by traders to determine the trend direction, is currently generating a positive signal and is painting a promising picture of the market structure. In particular, the upper position of the blue line can be interpreted as a strong indication that buyers are starting to dominate the market more. The main purpose of the vortex indicator is to capture trend formations in the market and analyze the strength of the trend. In this context, the blue line on the indicator represents buying pressure in the market, while the red line represents selling pressure. When the blue line is positioned above the red line and steadily holds this position, it indicates that the market is moving in a buying direction, and the uptrend is effectively sustained. This is exactly what the current chart structure indicates. The blue line has moved above the red line, indicating a positive momentum in the market. The vortex tells us which trend we are in. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.